Jonathan, late yesterday, Deutsche Bank announced over €7 billion worth of exceptional charges to its third quarter results. This morning, in response, its shares went up. What on earth is going on?
Well, as you point out, Oliver, the announcement last night was unscheduled. People didn't know it was coming. What people do know is coming is that Deutsche Bank is having a strategy day at the end of October, which investors are hoping will answer some fundamental questions about the group's direction. And I think what this announcement showed is that the newish co-chief executive, John Cryan, is prepared to take radical steps to trim the bank down to size, to get its balance sheet and profitability sorted out. And that will mean that he doesn't have to resort to a capital raising exercise, i.e. asking more shareholders for more money.
So what exactly did they announce last night? What was within these exceptional charges?
Right, well, the main bulk, about €5.8 billion, was write-downs of goodwill and intangible assets associated with two investments in particular. One was its 70% stake in Deutsche Postbank, which is a German retail savings bank, and the other was its near 20% stake in a Chinese bank listed in Shanghai. Now, both of those companies trade on public markets, but the way the value is accounted for is not simply a matter of taking their market value and multiplying it by Deutsche Bank's stake. There's an adjustment because these are now non-strategic assets. They're held for sale and you have to account for them a different way. The other factor was a €1.2 billion provision for any further costs arising from litigation. And that's a problem that many investment banks are facing at the moment.
So a lot of big charges there. That can't be healthy for the company's accounts. Do we think Deutsche will have to raise capital?
Well, that is the big question. The impairment charges do not actually affect the capital level. And Deutsche Bank's common equity Tier 1 capital, even after all these supplemental charges, will still be 11%, which is not as high as some of its peers, but it is perfectly within the requirements set down by banking regulators. So on the one hand, no, it doesn't. But on the other hand, there is an argument for getting on with it and raising some more capital now, not least the fact that other banks, notably Credit Suisse and possibly Standard Chartered, may also be coming to the market and asking shareholders for money as well.
Well, it perhaps sets things up very nicely for the strategy day due later this month. Jonathan, thanks very much.